given what you've seen this week, what are you thinking about? What is your sort of takeaway, if there is one to be had so far?
David, it's really that this is a symptom of the excess we're seeing in the markets. You've been around, talked to Art Cashin. It really feels like 1999 all over again. And this is really a symptom of the stay-at-home situation. I mean, this is excessive cabin fever. People have not been able to go on vacations, and so they're speculating and trading. And since it's commission-free, it's just kind of the excess that we're seeing in this frothy market.
And, you know, as somebody who makes allocations to hedge funds, what are your thoughts on that front in terms of perhaps some of the risks that at least some of them didn't see coming from this move to sort of gang up and really squeeze them when it comes to some of their shorts?
Yeah, I knew it was something when my son-in-law tweeted me this week and wanted to know what a short squeeze meant. I realized, okay, millennials are onto this. We only invest in two styles of hedge funds, so we're not involved in the people that really are market neutral or long short. And I think that it's a wake-up call that a crowd is okay, but a herd or a swarm is scary, and it can wipe out the markets. Short squeezes have always been a risk to these people. Shorting is a risky strategy. Hedge funds know that. This is incredibly unusual, and it has a lot to do with just the pandemic, that everybody's staying at home.
I mean, Treasurer's office actively manages about $35 billion. How are you thinking about your allocations as well in the midst of this?
Yeah, this doesn't change our approach. We don't currently invest our portfolio dollars in hedge funds. I serve on the board of the Illinois State Board of Investment, where we have over $20 billion. And when I came into office, we looked to get out of our hedge fund positions. And so this hasn't affected us. Actually, it's been fairly positive. But this serves as a great reminder that there is risk when you play in the market. These hedge funds should have known this as professionals.
Wait, why is it positive? I'm curious.
There are a lot of investors hopping in who don't understand the risks.
Not to cut you off, but why specifically is it positive?
Oh, I think you've seen we have been invested in GameStop before in long positions. We invest for the long term here. That's the advice we give to people who are looking to invest. And yes, there are day traders or people hopping in and out, but they have to understand there's risk. And when we talked about the son-in-law talking about a short squeeze, we find a lot of millennial investors who are getting caught up on social media and making investments and not having full access to information.
Hey, Chris, listening to you talk about it being about excess saving and being stuck at home, I mean, assuming the vaccine eventually gets to most of us and we resume normal economic activity, you would expect this phenomenon maybe not to fade, but certainly flatten. Is that your case?
Yeah. You know, David, I've got to admit that I think that when we get back to work and we have to be at a trade desk and interact with people and socialize, that some of this day trading has really got to ease off. We saw that in the 1990s, Carl, when trading finally eased, it slowed down, and these people came out of the market. And I think we're going to get back to that. Long-term fundamentals actually still do matter. We're just not living in this world right now where it's heir apparent.
Shepard Smith here. Thanks for watching CNBC on YouTube.